Greetings, Jedi traders. David here of TradingFibs.com to bring you the daily trend for. We are in week 4 of 2017, day 1. It is January 23rd. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. To support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Well, you thought it was going to be today. You thought the market was going to roar upside, and the air was popped out, and pretty much a flat market at the end. All right, let's jump into the pre-market trend after already taking a look at the momentum outlook for week 4. I want to check that out after you view this video, or week 3 recap where we finished off last week. But jumping right into the daily outlook, published 15 minutes right there before the market open, was looking for 50.78 upside and 50.39 downside. If we had broken that 50.39, was looking for the 5K. And taking a look on the ES, we were looking at 65 to 73 upside and the 50 downside. So how do we do overall? Well, we'll take a look at those charts here in a moment. But again, pretty much a flat market, some session highlights. Really, overall, indices remaining still range bound, closing out pretty much near their opens. NQ just slightly to the upside. Again, I had published over the weekend, I had thought Apple earnings were coming out tomorrow. They are not till the end of the month. So NQ just getting a little bit of footing here today as we had some earnings come out. We do also have some other FANG stocks coming out, but Yahoo earnings come out here, as well as McDonald's today. Bigger players. Economic highlights, not much econ data today. And in the news, a new President Trump signing the TPP withdrawal. One of the hot items in the indices right now, well, not necessarily hot, but cumulative tick being put out by Shadow Trader. A study worth looking at. Again, we've been following the tick for a long time, but here you can see the cumulative tick study here in the red. Great study. There are some alternate versions out there, but worth the $95 for you. You can check out Shadow Trader's homepage to obtain that study, but not a bad study. Show you direct overall. We can see here that market action really holding to the downside for the most part. But again, there are always pockets intraday for both directions. And when you have opportunities like that, you don't want to necessarily mess them out. All right, so overall indices trend overnight, we had the drop and pop, and we continued that little pop there at the U.S. session, unfortunately bringing it back down and recovering. So let's get right into the charts and see where we are at. Starting with the daily gap. Yeah, that's pretty annoying there. YM, how long is this going to keep this going? We're already a month and a half. YM sliding sideways, not coming anywhere near 20K. Still holding in the 1900s. ES pretty much same picture. Just pretty much say overall hanging at the highs, not forming any new gaps. A couple doji sessions, and I don't know. Market seems to be out to lunch. Investors. Hey guys, we closed that open gap from last session last week, down at 52.67, but formed a new one upside at 53.11 as the week rolls out and the battle ensues between OPEC and non-OPEC. Taking a look at the AD lines, we can see the NISS nicing, not really coming down too far and pretty much holding around the pivot. We can see here on the NISS NQ, again, that morning session pop, bringing it back down. Thought we might get that outlier out there, negative 70.75, but really never tapping the line there and back upside. Here we are, the YM price action similar all the way down. Outlier 25, typical line there to be at the extreme. And ES down to 325. Not many more lines down below. And recovered back upside to pretty much finish out the day where we started. All right, let's just jump right into the charts. There we go. Let's take a look at, we'll start with the indices. Let's start with NQ today. Again, you can always check out my blog here today to see where the highest probability setups on the arrows. Again, what we're looking at is we're looking for 5 over 34. We're hoping the all charts are in sync. That would mean the 50, the last row down here, the 5144, which is the same thing as the cloud here, be in sync. So that puts this setup at a high probability setup. Now, I Have the MML, the Murray Math levels on the chart here as well. You can see price action never getting to the highs, but at least a breakout here above the major support resistance at 50.58. And what was that level we were looking upside? Yep, around 50.78. So we never got up there. But sure enough, price action came down. There it is, 50.39, and we did pretty good. Yep, price action a little bit more is towards the mid-session, and then got an opportunity upside here to finish out the day with the last opportunity to the upside. So up, down, down. We had a move up and resurgence back to the upside, giving us a couple of solid moves. Not too much chop here. 15-tick chart actually looked a lot smoother. All right, YM again, same picture. There was that AM move. Price action underneath the cloud. VWAP breaks down. You can run it down to the MML levels or just watch the candles and trend, manage on the way down. So there was your second setup. Breakout back up above the cloud on the YM, pull back and back upside. Again, you want as many charts in sync on your setup. So YM not too bad today. Again, pretty much finishing out to the flat. ES a little bit cleaner here on a 5-4 flex Renko. There it is. Price action on the move upside right to the resistance, 2265. Take the turnaround entry. You can wait for the entry below the cloud here and ride it down all the way. Never really getting down to 2250, but almost. That was our level downside. And we had 2265 upside. So nice move on both directions. One solid trend downside. Pop back up and pretty much finish out where the day started. All right, take a look. Any highlights on the crude? Again, crude, nice move overnight session, or I should say on our Sunday session. I'm sorry, that was Friday's. Overnight was kind of choppy. Nice move down on the crude, which we saw that gap. So there it is. Short settle underneath, and we got pretty much all charts in sync to the downside underneath major support resistance. Really nice move on the crude, but that was pretty much about it. Got another lift here towards mid-session and end of day. Goldie gold, not far from the crude there on the charts. Price action on Sunday got the overnight lift. A lot of chop in gold inside the range here from one end to the other. There it was around U.S. Open. Break above the cloud all the way up to the resistance. Again, a little bit of pullback if you got stopped out. Maybe you took a re-entry, but gold really not going anywhere quick today. 6J, went over that this weekend as we see the 6J, nice Sunday open, price action to the upside. And pull back here and resurgence back upside. Again, time frame is everything. This is a 15-tick. If we go down to a 10-tick chart, there we go, 10-tick chart, couple better of opportunities, regardless of whether the MML resistance here, support, break above the cloud, kept you in the trend to the upside for the most part on the 6J. Yeah, 6E. 6E again, a little choppy here, overnight session, and then price action on the U.S. Open. Got a nice little lift here to major support, price back down. That was really the move at the end of the day towards the end of the session. All right, so again, really just pretty choppy all across, no major econ data. So where are we headed tomorrow on the three indices? Let's start with the NQs. We see the daily still holding up at these highs around 50.39. Let's go to the 60 and the 15-minute charts. We do now post here each morning together with the core chart. Core chart sitting above the 51.44 as we see the 50.78 above, 50.39 below. If we break either of these levels, we'll be looking to the 50 and the 60 minute. We can see 78 and 78 here, so we're pretty much in congruence all the way around. If we break the 39, look to the 29.19 all the way down to 5K. If we continue upside, still watch that 78 all the way up to 97. Taking a look at the ES, here we go. Price action on the ES still holding inside this resistance of 2281 upside, 2250 as the 50 EMA comes in play. Let's take a look at the 60 and the 50-minute chart. Again, look for 2265, first resistance as we did this morning, all the way up to 2273. There's that 2265 on the 15-minute chart, so you can see that would be first resistance. Anything downside includes that 2250 that we've been looking at in the bigger picture. Here you can see on a 75-tick range here as well. All right, let's wrap it up with the YM here, both on the daily and the core. We know the daily holding the 50 MA. Here it is, 1960.88 seems to be the line in the sand, 20K ever looming upstairs. But we need to break above that 19.844. So looking on the 60 and the 15 minute, There it is. 766 is going to be your first line in the sand. 766 both on a 15-minute and the 60-minute chart. Breakthrough there. We'll be looking up to 844. If we break that 844, we look to 20K. Anything downside at this point, we'll need to break that 688. We can reach any of these levels down to 658. And then eventually 688 breaks, we'll be looking down to 609. So tight range there. All right, looking ahead to tomorrow for econ data. Not much to speak of. Let's go to the U.S. There it is. There it is, January 23rd. A couple Red Star events, existing home sales. Nothing much on the Fed speakers. We got EIA Petroleum on Wednesday. A couple Red Star events on Thursday and Friday. GDP. Look to Thursday for, as we'll remind you throughout the week, we got, I believe, Starbucks has been moved. We have Google, I believe, and Microsoft all on Thursday, the 26th. All right, guys, that concludes an insight into the daily trend and technical momentum for key indices and key future markets. Excuse me. Feel free to stop by tradingfibs.com or any of my social media outlets to obtain more information. My mantra, one simple strategy, any market, any chart, any time frame will keep you disciplined. There it is. Looking for the setups below the cloud. Heikin Ashi bars to keep you in trend. Again, you want as many charts in sync. And then tie that in with a trading management strategy, which keeps you in. Again, this isn't obviously a chart that we see every day. We only hope to see those. So even if you get a pocket of trend, whether it's 10, 15, 20 ticks, you want to be looking for moves like that. Now, of course, you increase the amount of contracts. That will mean more ticks per trade. All right. You can find me, guys, every day on Twitter at Trading Fibs. And as always, I leave the crystal ball to the experts. I only watch what's in front of me and on my charts. And as always, leave your bias at the door when trading. Hey, guys, I wanted to bring this up. I know I didn't bring this up in the session. One thing brought up in the Jason Kelly. Again, one investor I follow long-term. One thing to keep in mind that was brought up in his newsletter this weekend was the amount of open interest for February. Right here at the strike call of 2122 on the VIX. So something to keep in mind as the weeks roll here is to gain any profit at this level would mean somewhat of a sell-off in the market. So we'll keep our eyes on that every day, and I'll bring that up in the recaps here. So keep that in mind. I'll pretty much maybe post a chart on that each day as we roll forward. All right, for those of you that are interested in joining us in the community of those like-minded traders seeking those highest probability setups, yeah, there are some traders still out there in this market. It seems like we're on vacation, but feel free to email me, david@tradingfibs.com. You may join us on any Thursday or Friday to view the live chart setups as they happen in the trading day. Hey, guys, have yourselves a Blue Zone day wherever you may be. Good day, good night, and good trading to you.